Hey, what's up everyone? Just wanted to make this quick video showing you how to scan for stocks for our trading environment within the system. So first what we're going to do is we're going to open up the scan tab at the top here. We're going to add filter for stock. We're going to add price. We're going to go to last. We're going to go to minimum of $5 and a maximum of $50. We will not trade penny stocks within the system. I just find them too unpredictable. And the stocks within the $5 to $50 range still have enough volatility, but they're a bit more stable. The next, we're going to add market cap. We're going to, again, because of the stability and they still allow for growth potential, most of the stocks we're going to be trading are small cap stocks. Following that, we're going to add another stock filter of beta, which is a measure of volatility for the stock. Basically, it's the stock's volatility in relation to the market volatility. So it's ranked by how much the stock deviates from the market. So basically, if a stock has a greater price swing than the market, the beta for that stock will be greater than 1. So we're going to go with a minimum of 1 on beta. Next, we're going to add a study filter. We're going to add a volume filter, average volume for the year, 252-day period, will be 300,000 shares. And basically volume just represents the intent and activity of a stock. So stocks with higher average volume typically allow for tighter spreads, and obviously with the greater liquidity it'll be easier to get into and out of trades. The next, we're going to go study filter again. We're going to go to custom this time. We're going to add condition, add study. We're going to look for the CT swing indicator. We're going to look for the ratio greater than or equal to value of 0.15, which this basically just means that the stock on average swings 15%, and this is another measure of volatility, similar to beta, but this is more direct towards the individual stock versus the stock in relation to the whole market. So this just says that on average each stock swing will have a 15% swing. So once we have our scan set up for price, market cap, beta, volume, and the swing percentage, now we want to enter in some price action data. So basically we're going to add a study filter again. We're going to go to custom. We're going to add condition. We're going to go to price, the low, less than or equal to price, the low of yesterday. And basically what this means is, since we're entering, if we want to enter a long trade off of a pullback, we would like to see the low either be tested so we could bounce off of it and sweep us into a long trade, or slightly breach it and then recover. Hopefully this would trap short sellers, so that way as our long trade triggers, they'll have to exit their positions, which would hopefully propel our trade into further profit. Next, what we'll do is we'll add a study filter for risk. Basically, we want to scan for stocks where the average risk will be somewhere between 5 to 10% of our investment, which if we're investing anywhere from 5 to 15% of our account into any one position, if we happen to lose the trade would be less than 2% of our total trading account. This will keep us in the game longer, so we can obviously continue to trade, have our capital to grab those beautiful opportunities that may present themselves. So we're going to add condition. We're going to go to study. We're going to look for CT trigger. This, we're going to take RP long, that plot, since that's the risk percent long, go to 0 because that'll be the risk for the day coming up. We want it to be greater than or equal to a value of 4.5, which would equal 4.5%, which if you round it up, that would be about 5%. Save that. We're going to add condition again. We're going to go to study. We're going to do CT trigger again. 0. Risk percent long is less than or equal to value 10%. So now this basically has us if we enter the trade at the up trigger price, the down trigger price would be somewhere between 4.5% to 10%. I'm going to add condition again. Now we're going to look to enter the pullback, but we want the entry to location to be above the CT average indicator, which basically means if we do get an up trigger, it's sweeping us into the upward momentum of the wave we're trying to get into. So we're going to go to study again, CT trigger, the up trigger, again 0. We want it to be greater than or equal to study the CT average. And then since we're looking to get into an up wave or enter a long trade with a potentially already existing up wave, we want the CT average then to be greater than or equal to the CT average from yesterday. So this would basically mean that we have an upsloping wave. And click OK. And that's our scan. We'll click scan and we'll see how many stocks come up from this. Generally, you'll get anywhere between 10 to 30 stocks. And we got 26 stocks. So what I like to do here is save the watch list as either the next day's date if you're scanning the night before, or the current day's date if you're doing it in the morning, and longs just as a label. So September 4th long, potentially long opportunities. Save that. Now to look for the short side, basically the price, the market cap, the beta, the volume, and the swing, those will stay the same. All we want to do now is switch from a potential dip in the market to a potential rally that we would look to short off of that. So it's just basically the opposite of what we just did. So now we'll go to price. High is greater than or equal to the price high from one period ago, that being yesterday's high. Click OK. And then this very easily, we just switch the risk percent long to risk percent short. Same thing, risk percent short. Now with this, we want the down trigger to be less than or equal to the CT average because we want to be entering into that downward momentum. And then the same thing, the CT average less than or equal to the CT average from a period ago, because again, if it's a potential wave, the slope of that average should be moving down. Click OK. Scan. Again, somewhere between 10 and 30 is usually a very common number. $15 stocks. Save watch list as 9.4 and shorts. And that's it. So now that leaves us with about 41 potential opportunities, 26 longs and 15 shorts. And that may seem like a lot, but it's really not when we apply the rules of the system to these stocks. And we can actually flip through them relatively quickly because, again, we're looking for specific scores to enter off of. So for a long trade, you'd want to enter a score off of scores between -3 and +2. Unless it's an outside bar, then you would want a +5 to a +7 score. And the reverse would be for shorts, so you'd want to enter off of a +3 to a -2 for shorting, or if it's an outside bar, a -5 to a -7. So just real quick, flipping through these as a little demo here. So ACB has a score of +6 and is an outside bar, so that wouldn't be something we would short or off of, so you could flip through that very quickly. Again, an outside bar of a +5, not even interested. We have an outside bar of -6, but we're already in a down wave here, so that would be a late entry. Wouldn't even want to look at that stock. QD +1, that could be a potential stock we could look at. ARQL, again, outside bar -4, no. Outside bar +7 for a short, no. So you could see how quickly we've already been through half of our watch list. So it doesn't really take a lot of time to look through these stocks. And so that about wraps up this video. I just wanted to make a quick video on how to scan, so that way you have a better idea of where I come up with my opportunities. So thanks for watching, and happy trading.